Imagine this. You just financed your dream car, and life feels amazing. You make your payments on time, keep it spotless, and then, bam, an accident happens and suddenly, you're not just worried about your safety. You're thinking, what happens to my loan now? If you have insurance, you might feel relieved, but it's not always that simple. In this video, we'll break down what happens if you crash a financed car with insurance. We'll cover what your insurance pays, how your loan is affected, and what to do if your car is totaled. When you finance a car, you're borrowing money from a lender, like a bank or dealership. You don't fully own the car until the loan is paid off, so the lender has a stake in it. That's why they require you to have full coverage insurance, collision and comprehensive. This protects both you and the lender if something goes wrong. If you crash your financed car, collision coverage kicks in first. This insurance pays for repairs or replacement, no matter who's at fault. Let's say your car is worth $25,000 and you crash it. After your deductible, your insurance covers the repairs if it's fixable. But if the damage is too severe, your car might be declared a total loss. In that case, your insurance pays you the actual cash value at the time of the accident. This isn't what you paid. Cars lose value fast, especially in the first few years. So if you owe $25,000 but your car is worth only $18,000, your insurance pays $18,000 to the lender. But you're still responsible for the remaining $7,000. That's the catch. This is where gap insurance comes in. It covers the difference between what you owe and what your car is worth. Without it, you're stuck paying that balance out of pocket, even without a car. If you're at fault, your collision coverage helps your car, while liability insurance covers the other driver. Just remember, filing an at-fault claim can raise your insurance rates later. If the other driver is at fault, their insurance should cover your damages. Even after an accident, your car loan doesn't just disappear. If your car is being repaired, keep making those loan payments. Missing payments can hurt your credit score or lead to late fees. If your car is totaled, the lender gets paid first from your insurance settlement. If there's still a balance, you're responsible for it unless you have gap insurance. Until that's cleared, the loan stays active, even if the car is gone. If the damage is repairable, your insurance pays for it, and you keep making payments. But if it's totaled, you'll need a new loan or lease for a new car. That means new payments, possibly at a higher rate if your credit score drops. Understanding your coverage can save you from stress and financial trouble. To protect yourself, always keep full coverage insurance while your car is financed. That means liability, collision, and comprehensive coverage. If your car is newer or you owe a lot, add gap insurance to cover any financial gaps. Regularly check your car's value and adjust your coverage limits as it depreciates. Staying proactive ensures you never owe money on a car you can't drive anymore. So, what happens if you crash a financed car with insurance? Your insurance helps cover damages, but your lender gets paid first. If the car is totaled, gap insurance protects you from paying the leftover balance. Accidents are stressful, but the right coverage keeps you safe from long-term financial issues. For personalized quotes from top U.S. insurers, visit Alias Insurance.